The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading day, your trading week, right here with me in the Morning Market Kickoff. And we pick things up this morning with markets in positive territory. Quite the scene over the weekend with Venezuela and Maduro. He is in New York now. We have crude prices a little bit higher, but no real reaction. We got the S&Ps up by 27, but you have crude right now up by about 1%, slightly positive this morning. And you see the action. We'll likely get a little bit of volume in that crude contract. You have Exxon and Chevron trading a bit higher. You have metals this morning up by 2.5% on gold, up $106. We jump around to this market, quite the sell-off. Okay, last Monday. That is last Monday. That's the daily. And yeah, that was quite a sell-off that we're going to be trading into. Now, on a weekly basis, you check out gold. Okay? Check out that bearish engulfing. You did it with volume, and all things considered, gold and silver had tremendous volume for holiday weeks. Okay? You had 3.5 trading days the week of December 22nd. Then you had 4 trading days last week, closed for New Year's Day. But yeah, on a weekly basis, you engulfed it all. Okay? You combine that, the fact that, boy, on a daily basis, that was a sell-off, and it's going to take some work to get through that level right now. Silver, you had some selling in silver, but not as pronounced as gold. Silver, let's put it on a weekly for a moment. We're going to take that off. Not quite the engulfing pattern, but boy, you had some volume in silver. Okay, you back off, you're trading higher again today. You check out the daily on silver, and same deal. Last Monday, I mean, look at this action. That is going to take some work to get through, folks. Silver right now, though, up by 7.5%, 76.35 as metals catch a bid. You jump over to platinum, up 6.5%. Now, platinum, same thing. Sell off last Monday with volume. You take a look at the weekly on platinum. Did not engulf it. So gold's the only one of gold, silver, platinum that engulfed the prior week. We kicked this program off with gold. Why not? Quite the action last week, and we're starting things off with a bang. Something to consider here. You take a look at gold. That's how you accelerate higher. Volume to the upside. You accelerate to the October highs of almost 2 million contracts on a weekly basis. We've backed off from there, and all we've done is come back and test those highs. And you've done it on lighter volume. So we accelerate higher, you pull back, you drift higher. Now we're pulling back on lighter volume. It's going to be an interesting one to see. Coming back from the holidays, how markets digest that stronger number and how they just digest regular volume coming back into the markets. You jump over the dollar. Now, on a weekly basis, you catch a little bit of a bid last week. You're at 98.68. We're higher by 26 pennies already this morning. You check out the daily, and there's the acceleration from the lows of Christmas Eve, 97.74. We're up almost a full point from there at 98.68. We have backed off, though, from the highs that we just made of 98.86. Okay, so a little bit of volatility in the dollar, but the dollar's stronger, metal stronger in the same vein. And now we jump over to the markets. S&Ps this morning up by 0.4% right now, 69.26. And yeah, we had some selling on Friday with some volume in this market. Okay, but barely did we get any movement, as in you basically finished unchanged on Friday. We had a little bit of volatility in both directions, but very light volume in these markets for the holidays. Check out these 2 holiday weeks, right? 2.7 million contracts on Christmas week and under 4 million on New Year's week. Now it's time to see what really happens when we get back to real trading. And it might even take a little bit longer, as in easing in, but this is a full week. And kids are back at school. You get the NASDAQ. That's your weekly. Same deal. Last 2 weeks, very light holiday trading. 1 million contracts on Christmas and 1.5. 2 of the lowest volume weeks out there. Between the 2 weeks combined, you're only talking about 7.5 trading days, right? You got 3.5 and you get 4. Between the 2 weeks, only 7.5 trading days. But the NASDAQ, we're up by 0.9%. You got the memory stocks trading higher this morning. You jump over to Micron. Look at this equity. It's not stopping, man. Micron's up another $8 this morning. Look at this. You were trading at 290 on Friday. You were trading at 283 on Wednesday. We just hit 328 from Micron. We got Broadcom up another $9 in the pre-market. We jump around to NVIDIA shares, up almost $3 to 192.06. We're coming into Friday's high in NVIDIA. Amazon shares up by about $1 with growth stocks trading higher. Microsoft shares right now up almost $2. We jump to the oil stocks. So there's your reaction on the overnight open. Exxon, you're up by about $4 from 122.65. Now, what's remarkable here is that, look at what these equities are doing on Friday, man. You think somebody knew something? We'll talk about it later in the program. The Polymarket bet. I'm not sure if you saw the Polymarket bet out there that somebody just opens a brand new Polymarket account, banks 30 grand, 40 grand, declaring that Maduro is going to get taken over and profits 400 grand in the matter of hours. Well, somebody knew something. You look at those oil stocks, man. On Friday, Exxon was trading at a 119 handle. We're going to open at 126. Chevron, the biggest player in Venezuela. Look at that move on Friday, man. Look at that move, right? And now you're going to open at 166. Look at this, 166. Let's back this up on a weekly. Yeah, you're coming into the highs of March, just like that. We were trading at, what, a 151 handle on Friday, and we're going to be opening at 166 for Chevron. Now, at the same time, taking over Venezuela, taking the oil, and allowing these companies to come in and develop all that oil, there's a real deal there that, you're seeing crude prices this morning, okay? This is not an easy bang-up profit job for those companies. In general, this is going to lead to ideally lower crude prices, and if you're in the crude business, that's difficult in terms of Chevron and ExxonMobil. We'll see, though. They get you a little bit of a bid today. We'll see how that plays out. You jump over to Bitcoin. Bitcoin up by $3,000, $93,230 right now, up by 3.4%. You check out the short term. You see the acceleration last night. You jump over to MicroStrategy. Off of the lows of 149, you're going to be up by about $6 from MicroStrategy. But folks, be careful of this one, okay? Just be careful of this one, man. You're approaching almost a negative net asset value. They're buying more Bitcoin. I saw out there this morning. But yeah, they got some issues, man. And that's putting it lightly. You look at the percentage pullback from 457 to 157. Okay, you're down almost 70% on this equity from the highs of this year. And that's not cherry picking the 543 high. That's just talking about the high of 457 out here. And you compare that to Bitcoin. Okay, Bitcoin is down, 127 to 93. You're talking about 35,000. You're talking about 30%. So Bitcoin's down 30%. MicroStrategy is down 70%. Markets in the green. We're coming back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps up by almost 0.5%, up 31 points, trading at 69.31. We take a look at that volume in the markets. So, remarkably light volume over the holiday weeks, but we got some selling on Friday. Something to watch there. Okay, now you check out the intraday action on Friday. That's the selling I'm talking about. You caught a little bit of a bid late in the day. That was on lighter volume. The selling in the beginning of the day, accounting for that volatility to the downside. And then you got that acceleration of volume, though you did, in the last 5 minutes on the close of the action. But nonetheless, you had a little bit of a flurry coming back into the market. And really, that's a red bar, but you're almost unchanged. Okay, you closed the prior day at 68.93, and you closed that one higher by 7 points. So you traded higher by 7 points in the S&Ps, even though it shows up as a red day in the candle, since you traded lower intraday. NASDAQ 100, similar, except you did trade lower. Okay, NASDAQ 100 inches a little bit lower on the session after some extreme volatility on Friday, and you do it with volume. Today we're going to bounce, and we'll see how the volume comes in. Jump around to some of the other equities out there. You got Walmart shares this morning, actually a bit lower as the market. Seems like it's going to be a growth stocks, memory stocks, chip stocks trading higher. And anytime that happens, Walmart's basically the inverse of that trade. Walmart, trade of safety, the anti-growth trade, you could say, just such a reliable company. Walmart going to open slightly in the red. You jump over to Apple. They've been almost similar to that preservation of capital safety trade. Apple shares, you're going to be in the green by a few pennies this morning to 271.20. We've been talking about Apple recently. I talked about them during the holidays. They somehow convinced me to buy a phone, tablet, and a watch all at the same time. Remarkable marketing. Remarkable marketing. I thought of Don Draper. Okay. Imagine sitting in a room saying, man, we have all these Apple fans, but our products are so expensive. How are we ever going to figure out how to get them to buy everything at once. And what's remarkable is that I had an Apple Watch that was about 5 years old. I had a phone that was about 5 years old. And I'm saying to myself, man, this stinks, right? I'm going to roll around and have to buy a phone at the same time as maybe I'm going to upgrade my watch at some point. That's a lot of money for a couple of electronic devices. And what happens? They basically get the phone companies to subsidize it. Quite a deal. Almost the playbook that used to run. But nonetheless, yeah, you're talking about $2,600 worth of Apple products on a single day. And yes, I'm on the hook to now Verizon for 2 to 3 years. But guess what? The next company is going to buy me out, and I'll go right back to T-Mobile. The competition in those two companies is fierce, man. And Apple and the Android makers are the benefactors. T-Mobile, you look at this equity. Now, we had a nice sign of strength the week prior to Christmas, okay? If you're looking to get in this equity, I wouldn't give it much, folks, okay? Because this is a series of lower lows, lower highs. You do have that nice sign of strength, but you break below there, your plan's wrong. That low, 194.30, that's T-Mobile, okay? It has been a heck of a run for T-Mobile, whether it's from the lows of 2016, whether it's from the lows of 2022, okay, where you go from 100 to almost 300. But, you know, I ran the numbers. Okay, I don't know what kind of deals they have. And if anybody does, help me out. What kind of deals? Does anybody know? How does it work? As in, what percentage? Are they paying Apple anywhere near the marketable price of the phone, the tablet, and the watch? Because I tell you, they have to keep me for almost the entirety of my 3 years to make money. And realistically, okay, after a year or two, you can just jump to the next carrier, and they'll pay off the remaining balance, et cetera, whatever it is. So I find myself saying, you know, that's where's all the competition, the profit of those competitions. You check out Verizon, under pressure as well off the highs of last year of $46. You're at $40.52 right now for Verizon. Now Verizon, you get some real selling in October with volume. That's your monthly. You put it on a weekly, same deal. You accelerate low on volume. You do find a bid the week of October 27th on their earnings, but both of these under pressure, man. So. And Apple, I'm trying to be a little patient here to add to Apple. Looking for a trade to the bottom part of this channel line on Apple, just a little bit overvalued. And you look at the selling it has the week prior to the holidays. All right, we jump to some chip stocks. Oracle shares up by a couple percent in the pre-market, about 199 from 195.71. As I mentioned, those memory stocks, Micron, man, 324 right now from Micron shares. The other stock we hadn't discussed is Halliburton, oil services, higher. Now, Halliburton, it's quite a pop. You're talking about $2.40 right now for a $29 equity. You popped all the way to 35 last night. The one thing I'd encourage you, though, if you're getting into these oil stocks on a Venezuela play, they've basically been trading lower since the pop last night. Halliburton was up to 35, you're at 32. Chevron spikes to 187. We're pushing pre-market session lows at 166, as in, you know, giving up almost all that. You jump over to ExxonMobil, and you're up, but look how far off we are from the highs. And somebody knew something on Friday, so you think you're getting a bargain? Well, guess what? Somebody knew something, and they started buying, man. Okay, all of these equities were dramatically higher Friday, and then you look at the poly market news. You better believe people knew it when they're just creating crypto prediction market accounts, right? And benefiting dearly. I was joking with friends over the weekend. I was like, who needs equities to insider trade anymore when you can just literally trade the binary event that you control in the government? And I'm not saying Trump did it, okay? But somebody in that inner circle did, man. And it didn't go far, because you're talking about quite a bet of 30 to 40 grand for a brand new poly market account within literally hours of that attack going down. Pretty remarkable. But point being, not only are you giving up the pre-market gains, there's Friday. That's part of what's in there as well. Okay, this thing really just popped from 120 ExxonMobil. That's Friday's gain. Look at that action. Somebody knew something. They always do. And now it's just so traceable with Polymarket and all these prediction market accounts that, are they insider trading? Insider trading is actually encouraged, because by insider trading, that's what you want to set the market. as in you bring in people who know. Yeah, pretty remarkable, Steve, right? So check it out. T-Mobile, right? You're with T-Mobile. You got a 55-plus plan. That's the best. You can put other people in that plan. It's like my mom, right? You get a parent on the plan. They put you in the plan. They qualify for the 55-plus. You can always throw that in there. Unlimited text and call, $66 for 2 people, and you got a free phone. Well, they got to pay for that free phone, right? So depending on the phone you got, they're only taking in $66 a month. They got to pay back the phone. It's a tough margin business, man. Run those numbers on these phone companies. The battle is on. And look at the charts. Okay, that is a tough chart for T-Mobile, folks. From 276, from a high at 260 in August. You're at 199, and we have selling to the downside Verizon shares. Same deal. Look at all the selling in this equity. October sell-off, right? Just the sell-off we had December 19th, the sell-off we had on Friday. All right, folks, markets in the green. We're coming back for the opening bell.
Musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open, and we push higher on the opening bell. S&P's now up by 41 points, and yeah, that's the highest point that we've at. We're at the highs of Friday, right where you were Friday morning. 69.39.75. We just got over that price level. We're at 69.41 right now. Growth stocks pushing this market higher. NASDAQ 100 up by 1.1%. The Dow right now up by 0.4%, and the Russell up by 0.5%. Bitcoin up by $3,000, up 3.3% at 93,150. We jump over to crude. A little bit of a pop, 58.10 right now, up 1.4%. We hit 56.31 overnight. Crude trading higher. Take a look at the daily on crude. And yeah, maybe this is the break. We've been talking about this channel line. Okay, now where's the top of this channel line? It's close. It's an area. It's not an exact science, folks, and we are right close to that level right now. Okay, let's line that one up with the correct point there. And where's the linear regression best fit? It's pretty close, man. It's pretty close to right here. Okay, but we're breaking above that area. So watch this crude contract as we attempt to break away. We've been in this downtrend channel for the better part of more than 4 months. Began right at the beginning of August, September, October, November, December, 5 months. Crude up by 1.4%. Jump over to metals. Gold up by 2.4%. Watch the volume today. Okay, be interesting to see as your benchmark against last Monday when this thing ripped lower. Metals ripped lower last Monday, and you're trading higher. And we're gonna dwarf anything we did during the holiday week last week. Okay, but there's some big time holiday volume numbers. We'll see what we get today, but we get some volume coming in on the bid side on metals. Gold up by 2.3%. $100 on the dot. Silver up by 7.3% right now. And how about copper participating? Look at this move on copper, up by 4%, $5.92. You're doing it with volume, already ahead of the volume we had on last Friday and on New Year's Eve. And yeah, we jump over to copper. Copper hits a record of $13,000 a ton for the first time. Traders have ramped up shipments to the U.S. in recent weeks in anticipation of potential tariffs this year. Copper up 42% last year, best year since 2009. Trump's plan to revisit the question on tariffs on primary copper in 2026 revived the arbitrage trade that rocked the market earlier in the year. That would be this one. And we're pushing those highs. Copper up by 4% right now. We jump back to gold. Jump back to the dollar right now. Dollar at 98.70, and we jump to yields. The 10-year at about 4.17%. All right, we talk about the Fed. So you got a couple of things looming out here. Number one, we could get a Fed chair nominated, that name out there, right, in the next coming days or weeks. And right now, the next meeting is 23 days from right now. Okay, it's 3 weeks from this Wednesday. And right now, the market's about 84% sure they're not going to do anything. We're going to stay at 3.5 to 3.75. You go out to March, it becomes much closer to almost a 50-50, whether we stay where we are or we get a further 25 basis point cut. You go out to April, Powell's final meeting, and the market thinks we may get one more cut. Still a 40% chance right now we get no cuts for Powell's next 3 meetings. June 17th, the first meeting of the new Fed chair. That's the time we get a substantial shift. Only a 16% chance. And folks, I don't know what the market looks like, okay? I do not believe the market's correctly assessing. I don't believe there's almost a 1 out of 5 chance that we are not going to get any cuts through Powell's 3 meetings and the first next Fed chair meeting, okay? Nonetheless, by the time you get to June, the market's thinking 1 to 2 cuts by then. Let's just go out to December. And the market's still only at 2 cuts, okay, with a slight bias towards whether you go 2 cuts in the middle. It's a nice bell curve with a little bit of a bias of 3 cuts, okay? So market 2 cuts with a little bias to potentially 3 versus 1. 2 cuts. Can you imagine the next Fed chair? Even if they go, this is what I was saying, at a minimum, right? let's just say Powell does not cut at all for January, March, and April. We get a new Fed chair that takes the reins in June. If Powell hasn't cut by then, they have one cut then. They skip a meeting in July. They do another cut in September. They skip a meeting in October, and they do it in December. That's 3 cuts, and that's the slowest schedule that I could imagine right now. What stands in front of that is inflation, okay? And the market's going to be watching those numbers, of course, but the Fed's worried about jobs. And from all the verbiage, right, where we are, I would be hard-pressed to see, if you tell me, what do you think the risk versus reward is in this market, right? Do you think that we're going to get, because the market's only pricing in 2 cuts right now. So you'd say, okay, what's your risk versus reward on what side you're going to make this bet, right? You say, okay, what if you think they're pricing in too many cuts? You say, okay, they're pricing in too many cuts. I think 2 is too many. I think we're only going to get 0 or 1. Okay. I don't want to know what the world looks like in terms of, and I'm just saying, I don't want to know as in, I don't want to, there's going to be an extreme amount of problems with inflation if we're getting 0 to 1. I don't see that playing out, not to that degree, okay? If anything, I see this taking years to play out, as in they're going to run it hot. You're going to get a new Fed chair that comes in June. The pressure is going to be on to cut rates. They're going to cut rates. And worst case scenario is how they'll say things. All right. And it's a reasonable argument. All right. Worst case scenario, we're going to run it hot. We're going to make sure the jobs market stays hot. And worst case scenario, we're going to cut. And then we're going to have the ammunition to hike rates to get control of inflation if that becomes a problem. But guess what? Right now, the problem is employment. And that's how the Fed looks at it. So I look at those 2 scenarios and I say, man, the Fed's only pricing in 2 cuts this year. What are the odds they price in less than 2 or more than 2? Well, folks, Powell could still cut. If Powell cuts and the next Fed chair has 5 meetings, what's the risk reward on 2 cuts, right? And even if Powell does not cut, the next Fed chair has 5 meetings. I see 3 cuts as like the base case. 3. And right now, 3 is only a 26% probability. And if you add up the probabilities of 2 or less, the market's pricing in a 55% probability that we get 2 or less cuts next year. And realistically, I don't see that playing out. Not in the short term. We may get some hikes if things get out of control, but they're going to run it hot, man. They're going to run it hot, and they're coming. And the markets, they're running it hot to start this week with the S&P's up by 40 right now. NASDAQ 100 up by 190. We check back in on metals. Gold up an even $100, $102 in the green at 44.32. And how about platinum? Up another 6.4%. Stay tuned, folks. We'll come back. We'll look at some of those memory stocks trading higher today. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by more than 0.5%. We're up by 41 points, and yeah, we are right at Friday's high, basically, right before we got quite the sell-off. 69.41 right now, and S&P is just over Friday open of where this market was. NASDAQ 100, not quite up to that price level just yet of Friday's highs. NASDAQ 100, we were just up. We just gave up 100 points in that index from 25,672. Yeah, 25,568. NASDAQ 100 up by 0.7%. The Dow catches a bit on the open. Check it out. Up a full percentage point, up 472 points, and the Russell up by 0.7% as well. We jump over the heat map. So the Dow trading higher. What do we got? Some of the banks. Goldman. That'll do it, man. $933 equity up by 2%. For Goldman shares, American Express up by 1%. Banks are trading higher. Caterpillar, a $600 stock up by 2.4%. Chevron in the Dow as well, up by 4.5%. You jump over the NASDAQ 100, as I talked about, the memory stocks. Look at this. Intel up by 3%, AMD up by 2.7%, AMAT up by 3.7%, Lam up by 3.5%, ASML up by 5.2%, NVIDIA up by 1.6%. You jump over the S&P 500. Let's go to the 100 first. Consumer staples lower. Pepsi off a full percentage. Walmart off a 0.25%. Procter & Gamble off by 0.8%. Comcast, they complete their spinoff of Versant. I was looking at this morning. Comcast is down 6%, but what's going on is they just completed the spinoff. So I guess this is a reflection of the loss of the value, basically. Yeah, Versant. So the spinoff starts trading today. Under the terms of the transaction, Comcast stockholders get 1 share of Versant for every 25 shares of Comcast they held on December 16th. Yeah, and Versant rips lower as well on the open. So that's that equity. Yeah, there you go. So that starts trading today, and that's why you're going to see Comcast lower. All right, we jump over to NVIDIA. Let's take a look at the big dogs. Ooh, all right. A little bit of selling on the opening bell. Now, volume-wise, NVIDIA's got a nice sign of strength. That was options expiration December 19th. Back up to the weekly. That's also the week of the 19th. And you've just been shopping around for 5 full months on this equity. You got quite an acceleration up to 212, but realistically, this thing's been at about $180 to $190 for the better part of 5 months A little bit of a consolidation on NVIDIA shares right now. We'll see how the volume comes in this week. Jump over to Microsoft right now. Microsoft, all we are is right back to the 382 of this move, folks. It's been a heck of a run. Microsoft, the April lows to the highs of 555. You double tap that high. We had a nice sign of strength. Same thing, options expiration in Microsoft. Now the low there is 470.88. Okay, you're only a couple bucks away from there. If you're in Microsoft, you want to see that area hold. That's your support right there. 470.88. You're trading at 472.66 within about $2. Jump over to Amazon. So Amazon catches a bid today. Look at this. Up by 2.3%, up $5.26. You know, what's remarkable here is just the divergence across the board, right? It didn't used to be like this in terms of market traded up, market traded down. Yes, you always have the dichotomy of a safety stock like Walmart or even Apple lately versus the growth stocks. But you never had this area where you just had some of the best stocks out there. Okay, like Microsoft trading lower, you have NVIDIA trading lower on the open, and then you have Amazon just ripping higher. Dramatic moves. Check out Google shares right now. Yeah, no real action on the open. Up by $1.50 right now. Google up 0.5%. Saw Tesla in the green today, catches a bid, up 3.7%, up $16 to $454. Jump over to Meta. Yeah, look at this, man. Getting back almost all of Friday. Meta up by $9, up 1.4% right now. And yeah, those chip stocks. Look at that. And then Micron gives it up, right? Micron was up to 328 pre-market. You're 315. Market can't make up its mind right now. A lot of volatility in this market. VIX right now, no volatility there. You're up by 47 pennies, but we got a VIX with a 14 handle. All things considered, 14 handle. Very little volatility priced into this market right now. All right, gold continuing higher, up $115 right now. Silver up by 7.5%. Take a look at the volume in gold. All right, we're going to get some good volume today. Not even 10 in the morning. We've already done 140,000 contracts. This is what you want. You know, this daily bar of last Monday, that's going to be a problem unless we can come into there with some real volume. Same thing with silver. Decent volume so far. Check out the weekly. Silver had some nice volume for the month of December. You know, you look at the volume doesn't show up. The monthly volume on silver is through the roof. I mean, look at these 4 weeks. Right? They dwarf anything else. In 4 straight weeks, you did massive volume on silver, and over that period of time, you traded from 56 up to 80. You did trade lower with volume. But a longer term trend is bullish. You compare that to gold though, and gold's not there, man. Okay, look at the 4 weeks I just told you about in silver. Yeah, you had decent volume, but they're nothing compared to what happened in silver. Look at the gold volume, December 1st. I'll bring this up even. December 1st, 8th, 15th, 22nd, right? 4 pretty unremarkable months compared to what you did when you ran up in October. Silver looks a lot stronger, man. Look at the October acceleration versus how you plow higher. The one thing, though, was last week, but you couldn't engulf the prior week, which is not as bearish, but boy, that day out there, okay? Right now, 80 is going to be a critical area. You engulfed the prior day. You did that on Monday. You took out Friday's acceleration. You did it with volume. And now what are we doing? We're climbing higher on what's going to be lighter volume, right? You climb higher and touch $80 again on lighter volume. Keep your spikes up in this market, folks. I think we're in a market where we're going to see a lot of volatility, and that's kicking off today. It's been kicking off, right? We jump back to that dollar, 98.66. Now, what's remarkable on the dollar, longer term, we're at a critical area. We've been in an uptrend channel since 2008. But right now, on a shorter term basis, 100's the ceiling, maybe 98's the floor. and we're just chopping right now. And I think we're going to get a little bit more clarity as we move forward throughout the year. Okay, government shutdowns in the past. The data is going to be a little bit more reliant, and we get a new Fed chair. It's going to be nominated within days or weeks. One more segment, folks. Don't go away. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Equities holding up well to kick off the trading week. S&P's up by 36, NASDAQ up by 215, Dow catches a bid. You got some of the bank stocks, Goldman Sachs trading higher today. Bitcoin up by $3,600, and crude up by 75 pennies right now at 58.07. We go back to a daily on crude, and pretty remarkable, right? There was a time when a move like this and the instability it represented might cause the crude market to react. But as the headline says, not your father's oil market. Geopolitical shocks lack the impact. Sanctions and fracking have changed the market. Okay, but one of the biggest things out there, how about just global oil production in 2024 with the U.S. of America? 20.2 million barrels. Okay? Yeah. Look at Venezuela. Well, that's going to change, folks. Okay. The biggest change for the oil market since about 1980 and 2003 has been the U.S. itself. The fracking boom. America is a top global producer. The supply more responsive to prices. Producers can ramp up or down more quickly than during past crises. And naturally, that means the risk versus reward of fixing rusting wells in an unstable country like Venezuela looks different. And you're seeing it today. Now, this is a little bit of a bid, though. We've been in that downtrend channel. We're going to get a bid. We're going to get it with some volume today as well. Already 140,000 contracts. But all things considered, man, yeah, could lead to lower crude prices taking over Venezuela. All right, gold's not stopping. How about it? Up $121 right now. And silver up by $5.80. Folks, thanks so much for kicking off your trading day right here with me on the Morning Market Kickoff. Stay tuned. Basil Chapman, he's coming up next. We got our man Steve Rhodes with the Trader's Edge at 11. Fast Market from the Schwab Network at 12. Larry Pesavento with Trade What You See at 1 o'clock. And I'll be back at 3 o'clock today, folks, for the Tom O'Brien Show. Have a great Monday, folks. Thanks so much. We'll see you at 3.